Right, can you see my screen, Phil?
Phil, when I'm recording, I can't check the chat, so you'll have to do that
All
potentially.
right. Cool. Same here, but we'll figure something out.
Actually, I'll check it. That makes no sense.
Yeah, I can just jump out. Can you see my screen? Yeah, it should be the Decentrader live charts page. Yeah.
Yeah.
Perfect. Okay. Well, let's get started then. Hi, everyone. Welcome to the Wednesday live stream session. Hope you're doing well, having a good week trading in crypto. It's been a pretty volatile week, so hopefully you've all been on the right side of it. We'll probably look at price towards the end of the session today. But for most of the session, we're going to look at something else. So each week on these Wednesday sessions, we try and focus on a particular subject. Whether it's a couple of weeks ago, we looked at all my alt trades. Last week, we did a tutorial on Uniswap and so on. So this week, I thought I'd share a brand new on-chain indicator that I've been working on, which is pretty good at picking out the global macro tops for Bitcoin cycles with a pretty high level of accuracy. So I think it's really interesting. It is available on the Decentrader website, but hasn't been officially released or published yet in terms of me talking about it on Twitter or writing a paper. So I'm sort of writing an article about it here at the moment. So just got this draft version you can see here. I'll probably publish that in the next week or two. But I thought you guys might like a little sort of exclusive hearing about it here first. So the indicator is on Decentrader website. It will probably be on Look Into Bitcoin at some point soon, maybe in the next few weeks. And you may end up seeing this indicator popping up elsewhere. That tends to sort of happen with these things. But for now, it's only on the Decentrader website. So if you go to the live charts page, scroll down to on-chain indicators there, and then it's this one. This is the one we're going to be talking about today. So the R-HODL ratio, I'll explain what that is in a minute. So we'll walk through how the indicator works, and in doing that, we'll inevitably talk about a couple of on-chain sort of general metrics. I'll then talk about how I think it's pretty killer actually in terms of being able to identify those highs for Bitcoin price. And then we'll go on to talk about the reason why I actually really like it, because I think it's got a few advantages over other on-chain indicators that have arguably some flaws in them. So we'll go over that. And then we'll just have a quick look at what it tells us in terms of where we are in the cycle right now. And then after that, we'll probably have a quick look at price, and I can chat to Phil about that. All right, so if that sounds like a good plan, we'll get started. Let me just double check there's no comments in the chat. Before we get started, make sure everyone can hear me. Cool. Okay. All right. Looks like it's all good. Sorry, there's just someone. The beep lol. Okay. Right. So let's get started then. So R-HODL ratio. The R stands for realized, and so before we actually look at this chart, so if you click on the live chart on Decentrader website, it'll load up. It looks like this, and we'll go over this in a few minutes. But before we do, there's just a couple of existing on-chain concepts that this indicator builds on. So we kind of need to go through those first, make sure everyone's familiar with those, and then this will make a lot more sense. And the first of those is the difference between market cap and realized cap, or market value and realized value as they're sometimes called. So these you can look at on the Decentrader website as well. They're both on a tool called MVRV Z-score, which we've shared before briefly in the live streams. So for the purposes of explaining realized cap, I'm just going to take off the Z-score because we're not interested in that. All right, so we've got two lines on the chart here. One is market cap, which is quite simply the market cap of Bitcoin. So the price of Bitcoin multiplied by the number of Bitcoin in circulation. So very similar. In fact, it's the same concept as market cap for stocks and shares. So it's the price of the shares multiplied by the number of shares gives you the market cap. But that's really straightforward, and you can see that's why it looks so much like the Bitcoin price. The orange line is a little bit different. So the orange line is realized cap, and instead of taking today's price or the current price in the calculation, what realized cap does is it takes the price of when Bitcoins were last moved from one wallet to another wallet. Okay, so very different. So let's take an example. Let's imagine Phil sent me a Bitcoin, one Bitcoin 18 months ago when the price of Bitcoin was around $4,000, say. Thanks for that, Phil. Very good. So he sends me the Bitcoin then. That Bitcoin is now worth about $11,500. But for realized value, the calculation there, we're using the $4,000 price of the Bitcoin, because that was the price when it was last moved from one wallet to another wallet. So that's the difference between the two. And that's why you see this nice smooth line for realized cap versus the more erratic market cap, which is including current price all the time. So that's a really important distinction to understand. A little side note is whenever market cap dips below realized cap, it's historically been a brilliant time to buy Bitcoin. So you can see here back in 2011, you can see here back in 2015, and then the last bear market as well. And also look in the recent March Corona crash. And that's why I was so bullish around that time. Talked about it a lot on Twitter. Well, one of the reasons, that's because price or market cap had dipped below realized cap. Anyway, so that's the difference. Realized cap looks at the value of coins when they were last moved from one wallet to another wallet. The second concept just need to be aware of is hodl waves. So both Phil and I have talked about this before, so I'm assuming most people are broadly familiar with this. You can check it out on Glassnode. What we're looking at with hodl waves is essentially it's grouping coins since they were last moved. So we have these different groups by age charted here. And so you can see the darker red bands towards the bottom. Those are coins that have been moved from one wallet to another wallet more recently. So say in the last week. So if you look at the red lines, and then up here towards the top, we've got coins that haven't been moved for much, much longer. And in fact, it's most likely, so you can see the purple line here, it's most likely that a lot of those are lost coins, because you can see they haven't been moved for over 10 years now. Or they're being held by real OGs, so real old guys who very, very occasionally move their coins. So that's the concept of hodl waves. You can see it adds up to 100. So it's all the coins on the network, and the waves look at the time periods of when coins last moved between them. And what we're particularly interested in is these. If you look here, each cycle, you can see when price pumps, so the dark line being price, you can see the shorter waves spike up. And the reason for that is because new entrants coming into the market, buying Bitcoin's changing hands, so other people are selling, so there's lots of selling activity, and so these shorter time frame bands are jumping up. So we see that each cycle, and then they come back down again. So hodl waves is another really useful tool, and the reason why we look at that is because actually what this new indicators I'm leading up to doing is it's combining both realized value and hodl waves together. So Decentrader subscribers get access to this chart, which is our hodl waves. It's actually locked for everyone else, but you guys can access it. And what it's essentially doing is it's assigning a weighting of realized value to each of the hodl waves. So it's not just based on time, it's based on the realized value of the coins within those different age bands. Does that make sense, Phil? Because I appreciate it's a couple of concepts I'm sort of throwing in at the same time.
Yeah, I thought you explained that really clearly. So I'm just trying to interpret it because obviously, well, it's not obvious, but this is the first time I've looked at it. So, do you want to just explain this bit a little bit again?
Yeah, exactly.
So up the right, you've got the price,
So up
and on
the
the side,
yeah, exactly. So the right hand side, you've got price, which is just purely for this white price line. So that's for the price line. So we can sort of forget about that. What we're really interested in is this percentage on the other axis that goes up to 100. So that's all the Bitcoin in the network, in the same way that we had on HODL waves. If you look at HODL waves, you see it all adds up to 100. And HODL waves breaks out all those coins by when they last moved at different time periods. You can see here whether it's weeks or last month or between 3 to 6 months, etc. And all the realized HODL waves chart does, and this isn't something that I came up with, this is leading up to my indicator. This just assigns for each of those different age bands the realized value of all the coins within that age band.
right?
Yeah.
And the idea is that, well, you can see what the idea is, can't
Yeah,
you?
exactly. You can see the idea. So the reason why this is very interesting is look at how that it spikes when we reach the top of the Bitcoin cycles, right? So HODL waves, you get it a little bit, and we do obviously use HODL waves for sort of macro analysis, and you do see these spikes. But the really interesting thing about the RHODL waves is you get these much bigger spikes when we're reaching the top of the market cycles. And so that's what got me thinking, well, you could potentially build an indicator off the back of this. And so that's what I kind of did here. And essentially what I've done is I've looked at the ratio between shorter term realized HODL waves and some further out ones. So actually what I've done is I've compared the weekly, which is kind of these first two red bands down here at the bottom, versus the 1 to 2 year, which is this. If I click it on and off, you'll see in a second. If you click it on and off, it's this band here. Whoops. It's this band here. Just want to stay on there. Yeah, there we go. And so basically I'm creating a ratio between those more extreme and sensitive shorter term waves versus the longer term ones. And when you do, long story short, you basically get a ratio that looks like this. I've also done something which accounts for the drift you see in HODL waves, but we don't need to get into that. But basically what it does is it gives you this really clean looking indicator, as you can see here. So you can see it's the realized HODL waves 1 week divided by the longer term 1 to 2 years. And then I've multiplied it by the total market age to account for drift and lost coins. And so you get these really nice clean spikes. And you can see, and I've highlighted it with the red band up here, it picks out the tops of the market cycles very cleanly. And my sort of thinking or rationale for this, which I'll go into in the article, I'm not going to go into too much detail now, but I think it's because of the halvings. So you get these supply shocks every few years, and look at how realized value has reacted after each of those halving events. You see, we have the halving, and then more and more people, so we get the supply shock, and more people start to FOMO into the market. Realized value rises up quite steadily. We had it first after the first halving, the second halving. This chart's a little bit out of date now, but we're starting to see it also after this third halving as well. And I think as long as the impact of the halvings is significant, which I think it is this cycle, I think we're going to continue to see that play out. So that's kind of the principle of this indicator. It's kind of how it works. But let's take a look at why I think it's so good, and that comes down to its accuracy and like I say, 1 or 2 advantages over other indicators.
So Phil, just for me, this feels like it's a combination of two things, two factors, which is obviously people hodling for the the supply, the inflation reduction by half, obviously the halvening, and then
Yeah,
the assumed increase in price. But also the miners, from we were looking at it on Monday, the Powell multiple,
yeah,
which sort of says that the miners want to hodl as well because they know that they can bump the market up to get a
exactly.
much higher price. So you've sort of got it on both the demand side where people are holding onto their coins and they want to, because it's like a crescendo effect, isn't it? Because the more people who buy, the less incentive there is to sell for everyone.
Yeah,
The less there is to go round, which is, I think, why you see the parabolic advance.
yeah,
And then the perfect thing about this is it sort of says, right, okay, it gets to a certain point where all these people have held onto the coins for so long and they're in so much profit that probably the miners come along and dump at that point, or there's a collective desire in game theory to get out when everyone's so deep in profit for such a period of time.
exactly. And
So
I
it's
think it also shows the sort of frenzy that you get towards the end of the cycles, or certainly we've had in the prior cycles, because there's so much activity, and that's why you get the spike in the hodl waves and also the realized hodl waves in those later stages of the bull market. It's that sort of frenzy, and like you say, it's all the people who held on early on around the time of the halving, then also cashing in and handing on to other people.
mm,
So yeah, that's kind of how it works. I just want to show you kind of why I think it's really useful as a sort of addition to these long-term macro tools that can help you if you're, I guess, strategically investing in Bitcoin. If you're looking to hold a position for a long time towards the top of the cycle and then cash out, this is just obviously one tool that you can sort of add to the arsenal, if you like. So last cycle, so when we topped out in December 2017, wasn't it? So the top, you can see we topped out the 16th of December. The R hodl topped out on the 13th of December, so 3 days before. But obviously, the reason why I always include these sorts of pink bands for any of these indicators that are trying to call the top is because I think a sensible strategy, if you are going to use these tools as part of your kind of strategy, is you can obviously dollar cost average out when you're entering and exiting these pink zones. And so, if you obviously said, right, okay, I'm going to cash out now. Now we're in this pink zone, I'm going to cash out for the 2 weeks we're in it, or from entering this point, then you would have caught pretty much the 15 to 20k area around that time. And actually, something else I've noticed on this indicator is that it tends to go parabolic in the final phase. And so, another strategy could be, okay, I'll wait until the first day of pullback on the indicator once we're in the pink zone. And if you did that last cycle, then obviously, that's the day before the actual cycle top. But if we look at the cycle before that, so 2013, if I just zoom in there, you can see actually the indicator actually topped out same day as the price topped out, and we got that first pullback the day after. But again, I'm not saying it's going to pick it to the exact day this coming cycle, but it's the broad principle that it's showing you an area when the market is getting very, very overheated, it's very overbought, and so that would be a sensible time to consider taking some profit if you're a strategic investor, like I say. So yeah, cycle before it pretty much got it spot on, and then the cycle before that it was pretty close. Let's just have a quick look. So yeah, entered actually into the zone kind of the day it topped out, and then yeah, it peaked a few days later, but you were still sort of catching this area, which it is obviously a pretty hard thing to do, because Bitcoin, I think, only spent, like, even last cycle, I think it spent something like 10 days above 10K before it then actually topped out. I can't remember. Let's have a look. Yeah, it's like the 1st of December, and then we obviously topped out 2 weeks later. So yeah, these tools are pretty useful, and I think this is a really good addition because it's very accurate at picking the tops, and there's a few little techniques you can use to try and get more accurate, as I say. The second thing I really like about this indicator, which is something that I haven't seen on other on-chain indicators, and something that's frustrated me a bit with them, is this issue here. Back in this top we had back in April 2013. So if we go to something like MVRV, oh, it's loading up on Glassnode. Okay, let's go to pure multiple. Same thing happens on both of them. So if I was saying, okay, I'm going to allocate capital, if we go back to 2011, let's say I had this indicator back then. I say, okay, I'm going to allocate capital. I'm going to buy some Bitcoin when it enters the green zone and then sell when we get into the pink. What happened in that cycle was we got this, if you like, a false signal, and we ended up entering the pink zone early. And so that was when we had this peak of price going to about whatever it was. I think it was about $100. Okay, so 100, nearly $200. And so if I was, and obviously I'd never recommend this, but if I was strictly following just this one indicator, I'd have entered here, I'd have exited here, and waited for another entry back down in the green zone. And what happened was price actually ran away from you, because it went down here, we pulled back a little bit, and then we peaked actually at around, what was it? It was over $1,000, I think, wasn't it, back in 2013? Yeah, there you can see. And this, so you'd have missed out on that entire move, and you'd have waited for this back down here. So these tools are obviously still great, but none of them are perfect. But I do like the fact that this R-HODL ratio kind of gets around that issue, and you didn't get this sell signal in 2013, and actually you would have cashed out on the true cycle top, which was over in December. So that's something I really like about it, and like I say, it's not something you get on some of the other on-chain indicators. So I do think it's a good addition to the toolbox, if you like, for that reason. And then the third thing is you don't get drift. So on quite a few indicators, there's this sort of drift issue, like you can see here. So if we look at MVRV, which is market value divided by realized value, it's the ratio between the two. If I, hang on, that's going to load up. Yeah, you can see you get this drift over time, this downward drift, which makes it quite hard to then make a call on for the next cycle, I think. So when market value MVRV starts tracking up this time round, where should I start taking profit if that's my strategy? If I'm planning on taking profit when this thing tops out, where is the top going to be? It's quite hard to call. And again, you sort of had this issue here. Was this the top? Was this the top? Or this the top? So because you get this drift and it's not that steady, not that consistent, it's just quite hard to call. And you just don't get that so much on this new indicator. You can see the tops are pretty stable in this band. So you can see the second cycle high was actually a bit higher than the first. Last one was a bit lower. But so I look at this and I think, okay, there's probably a reasonable amount of confidence I have that this cycle round it will still be somewhere in this pink zone. So yeah, that's the third reason why I like it. So yeah, a few reasons there. I think it's interesting and stands out a bit from some of the other tools, really. And that's pretty much it, Phil. R-HODL ratio, I think it's very useful, particularly for cycle high tops. And if we look at where we are now in the cycle, it pretty much fits with what we've been talking about the last few weeks, really. You can see we're about here about 1.2 on the ratio, which if you look compared to previous cycles, that sort of level is around here. Last cycle around that 2016 level.
Yeah.
And then cycle before, similar kind of around here, really.
It's
So
amazing how all these things sort of say that we're in the same place as last time. It's just incredible, you know, from a time perspective, and no matter how you cut this data up, it just all seems to say the same thing, you know,
it does, yeah.
which is very positive.
It is positive. I think you know what? I think we should do a session where we look at all the all these indicators that can potentially kind of give you clues as to the cycle top. It'd just be interesting because there's obviously some on our website, but there's others as well. And I might just do a session where we sort of review them and kind of say, look, you know, there's these 6 different indicators that you could potentially use to call a top. But I don't know. It makes me a bit nervous.
Well, yeah. I personally think that this is like absolutely tremendous work. You know, it makes total sense because of the reasons that I sort of said before. It takes into account what everyone's actually doing in this market, which is holding on to their coins to try and dump them at the top when there's the big crescendo. The one thing I would say is we mustn't let the latecomers to the party see these charts. So the guys who we want to dump on, we must not tell them about all this stuff when they arrive.
And you know what, I agree with that, and I think my overall feeling with these charts is that I think they're actually still only seen by such a small amount of people, really, when you think of all the people who are potentially going to come in this cycle. So I actually have a pretty high level of confidence with them this cycle. I think after this cycle, I might need to review and just see sort of what the lay of the land is. But yeah, I think for this cycle, I think they're pretty good, and like I say, I think this one's probably a strong addition to the team, if you like.
Absolutely, very very impressive work. I think like one sort of, I'm just trying to think, how could you review this stuff? You know, like I've talked to you before about like a scorecard and that sort of thing. And this is very good how it's demonstrated the, you know, how you can see very clearly there's basically a buy in the sell zone, but the distance from the sell zone is quite big, isn't it? So I'm just trying to think, how do you relay to someone how far you've still got before you're at the top? You know, as an investor, you'd say, well, I've missed the green, I'll have to wait. But you could easily say, well, you're sort of X% of the way.
Exactly. You're at the first stop, if you like, aren't you?
Yeah. So I'm just thinking a lot of these indicators need some sort of how far are you from the top, because it's not green and it's not red, it's in the middle. So how far are you from, you know, the top? As I say, I think that sort of we can talk about that in a bit more detail, but I definitely think overall, like, it's a really smart piece of work. I don't know where you get these ideas from. You must sit in a dark room,
geeking out too much, mate.
Geeking out there, going into data overload, trying to work out how to catch the tops. But there's a lot of people doing this, and the data's just getting better and better, and it always seems to support the same sort of, well, it certainly supports my narrative in a way that I haven't been able to do it beyond sort of talking around the hodl wave charts themselves. So it's I'm pretty impressed by the output. Nice one.
Cool, thanks. Yeah, I mean, I think as long as Bitcoin's sort of in this adoption phase, a lot of these will play out. I think, like I say, maybe in a cycle or two's time, the wheels might start falling off them a little bit, because I just think the nature of the beast will have changed by then. Assuming Bitcoin, you know, continues to get adopted, which so far it seems to be. So yeah, I think they'll need to be reviewed probably in the next couple of years. But for now, they're good. And yeah, I agree, Phil, on the scorecard thing. I think well, as we've discussed before privately, I think that's something we'll put together. And I've actually started drafting something, so I'll share that across. Just been a bit DeFi heavy the last few weeks, to be honest.
Understandable.
To be honest, that's the reason why I haven't published that article yet, because I just got sidetracked. But anyway, yeah. So that is that.
Good.
Do you want to look at? Should we look at price quickly? Shall I get up the price chart?
shall I take over the screen?
Yeah,
I can share
let's
mine.
try and do that. What do I need to do? Sorry.
If you just stop sharing yours, and then I shall take over.
Okay, cool.
With,
So I stop streaming, yeah?
stop streaming, but don't stop your recording.
Cool.
Whoa, we've just disappeared into a whole. Just a minute.
Cool. Yeah, I can see your screen. Cool, we're good.
My moon screen, yeah. Right, so yesterday I did not record the live stream. It wasn't really a planned recording, to be honest, but see if we can get this up. So I'll just go through a few things there in case people missed it, because I think I just fancied just diving on to try and answer Jim's question about what I was seeing in the price. So yeah, yesterday basically we knew that. Well, I had the idea that I wanted to try and get. So take a step back. I sold out on Friday for personal reasons. Just wanted to have the weekend off and chill. So I sold out at about 11,600, and watched the price come down. Didn't buy, but sort of had the idea that because we could see open interest generally increasing as price went up to 11,800, that there was going to be an opportunity to get back in lower. So what we saw, and I initially was bidding sort of 11,300 because the idea was that you're going to get higher lows, and that was going to be here. But what was really interesting, and I'm going to keep banging on about open interest until everybody's looking at this as one of their most important indicators. It's something that you just don't see people talk about on Twitter. I don't know if that's because it's like alpha that people don't want to share, or the people just aren't using it, or I don't know why, but to me it's a major edge in the market. So let's just try and keep it amongst ourselves for now.
I think you're right, Phil. I think it's a bit of both, actually. It's a bit like CVD, which you introduced me to. Hardly anyone talks about that. I've noticed a few more people starting to talk about it now, but not that many. So that I think that's still a good bit of alpha as well. You introduced me to.
Yeah. So the CVD being where you can tell how much the market's absorbing the buying and selling. So basically, what I saw yesterday was I had an idea I wanted to get filled down in like the low 11,400s, 11,300s, but really open interest came into play because I could see that as price was coming down here, open interest was opening up massively. And so whether that's people going long or short doesn't really matter. But I knew there was a lot of price action going on up here. Now, if you just analyze any data set, when open interest hits about 780 million in this market, that open interest gets hunted by whatever forces there are, there, whether or not it's the exchanges, whether or not it's people who have better data than other people. But people could see basically in this box here that that people were getting into a position. And so I was coming up with the idea that, well, we're going to have to run this low down here to clear out the open interest. The problem was, and so what I did was I put my bids like slightly below the wick, here. But again, I could see that open interest continued to rise like at an alarming rate, particularly on this candle. So I was sat here saying, oh, I'm cancelling these bids. Yeah, okay. I had a trade plan. I decided I want to go long. I want my stops to be below 1100, and 11,100. Sorry, and I plan to go long. Yeah, but the problem with coming up with a really hard trade plan like that when you've got additional information is that you can just, why would you not adjust your plan to the new information that you've got? So as as we could see on this wick, there was just no movement in open interest. It was going up still. So I was like, okay, we've ran the stops, but people haven't given up on these positions yet, because what you might have seen then was this wick run down and then bounce back up. So I just moved all of my stops down to like, I think, the low 11,200. So I didn't get right in at the bottom, but I was more comfortable that, we might be needing to run this liquidity over here. And that is actually kind of what happened. We ran down and then we had a strong bounce. So I guess and then you could see open interest was coming down. And as we've sort of climbed up through this point, people who were in there, either their long or short trades, as we came back up to this point where, people started going underwater or being in profit as a shorter, everyone started offsetting their positions. And all of a sudden, this was the line that I had here. I didn't adjust it. We ended up getting back to this trend to the upside. So, when I saw this today, I was like all in long, like 70,000 contracts on my my tiny little Bybit competition account, because I was just so confident that that we were going to run back up again to force all of the guys who were in the money out of the money, and the guys who were trying to get long from here, they were all going to close their positions and get out. So when we've had an open interest reset like this, you tend to get this run up. You can see all of these times actually when OI has got too high. So here we had to come back down. It happened here as well. So at the minute, if open interest at 780, you want to be a seller. Well, not financial advice, but I'm a seller, I should say. And you can see that, I mean, a lot of this is to do with that deleveraging event at BitMEX. I think naturally it's had a general recovery on the platform. But yeah, open interest steadily going up as prices going up is a strong thing. When we were in that consolidation last time, what we actually saw was open interest started doing this ascending triangle. And we are actually doing that again here. And what you're likely to get is ultimately you will get a breakout, and then we'll dump back down again. So overall, like that's just what I wanted to share, because I know a few guys missed that. And the kind of the key point that I'm making is you've got to be fluid if you want to be a day trader or a like snipe the bottoms and get better entries and all that sort of thing. Well, yeah, okay, I would have been fine with my 11,300 entry, but what might have happened in reality is, without getting into the data and looking at this stuff, I might have I'd have probably started trying to think, oh God, I'm at 11,300, it's at 11,100. What am I going to do? I might, oh, I better cut my losses and get out, because everyone on Twitter is telling me that immediately the bear charts come out and told you so guys are all like going off it. So it just helps you read the market a little bit better, readjust your entries, and get yourself positioned into a much more likely situation to be able to make that money. And rather than sitting here praying that you get back to break even from your slightly early entry, instead you sort of like really putting your foot on the gas to put more into your position, and you can scalp within it. And when you get a dip, you're not like worrying about your position like we did today. We got a dip back to 11,300. I was fortunate to be like, okay, we made some money scalping around here yesterday. Let's buy some more. Open interest still going down. People are still worried. They're still getting out of the positions. I'm not. I've got conviction it's going to go up. So let's remain long. So other things that were to note yesterday was we had a bullish divergence on the Terminator indicator. Terminator indicator rhymes. And obviously, along with that, all of the timeframes on the low-level timeframes all started to go green as well. I mean, I did get this morning here, and I was longing this down here, despite this turning red. I mean, I was a little bit nervous about that, but the other indicators on all the other time frames were still green. So that's why I like to use the cross time frame analysis, because you can sort of, despite the 30-minute and the hour chart being really good, you don't want to lose sight of what's going on, like on the 4-hour, which is really where, you know, it's a better barometer, I think, in the market overall. So the other thing, so obviously we had the bullish divergence. We also had the funding, didn't we? So we look at this a lot of the time. You know, funding started going negative down here as well, which tends to be a sign that people are, you know, trying to get in the market, trying to get out of the market too quickly, or they're overly bearish. Particularly when you're in a, you know, nothing had really changed. The daily close was, it wasn't ideal. We did make a lower daily close at just below 11,400. That was the level I really wanted us to close at. But we did wick, you know, quite heavily out of the support on the demand zone down here. And the move was generally brought about by gold and silver depreciating, and the dollar having a bit of a better day yesterday. And again, we talked around that, which was largely to do with the potential chat about inflation in the US economy, which I think's tomorrow they're going to be talking about that. So overall, I don't think the dollar is going to be strengthening anytime soon. As I said, the inflation rate in the US is below their target. So if anything, they're going to presume, and also they said they're going to keep the rates flat. So overall, I mean, the bond market as well is something to consider. But overall, the narrative is the dollar's weakening. We're in a bull market. This is consolidation until proven otherwise. Everyone got super overly bearish. So I'm still a bull in that situation, you know, particularly when we have the cheats like open interest to work with as well. The CVD as well, I'll bring that up. The CVD was also showing us, and it's still showing us quite aggressively actually, that there's massive amounts of absorption going on. So you can see it's even more aggressive than it was over here, relatively, you know, like look at the lows down here compared to what it was over here. I mean, this was a long drawn out consolidation, and this is a much more fast moving beast. So again, I think if you get down to a really low time frame, yesterday you could see that you know, the CVD generally follows price here. You know, like I try and just line it up. I'm pretty basic. Generally was following price, and then all of a sudden you got this massive, it ran away. You know, everyone was market selling, peaking up on the positions, trying to get out. And that was another reason why I was sort of fairly comfortable with the fact that that things weren't so bad. And also you can see, you know, I was talking about those guys who were getting filled on the bids. You can see all those guys here who are getting filled, and the idea is that they all, what I think we saw was they all got out. And yesterday you can see that the sell orders came in here. So it's difficult to read all this stuff, but reading between the lines, I see these guys got long too early. Price went down. They all worried about it. They put their stops back up at, or they took their profit break even up here. And that's why open interest started to reduce, you know, so some of them got stopped out. Open interest continued to reduce when people were closing. So people who bought the bottom closed their position into the people who were closing their badly timed long trades. And then thereafter, you know, we've just floated back to the upside again. So that's sort of how I'm trying to read this market. It's something that I've been using more frequently lately. So I do want to put together basically how I trade course. It's not going to be like, this is everything you can do, this is every indicator out there, blah, blah, blah. It's just going to be, this is how I trade, sort of take it or leave it. And so I need to try and work out how to articulate exactly everything that I'm doing with open interest. But I just want to keep you updated as I go. And if someone's got a question, as I say, I will generally try and jump on relatively quickly to discuss. So apologies that I didn't announce it. We will do that again in future. I did issue a newsletter, or we collectively issued a newsletter today, and the gist of it is, I mean, we just give a very high level overview of what, we're on the ball talking about in here all the time. But this is the overall trade that we're in. So since starting Decentrader, I got long at 11,150 or whatever, scalping around in here. Concerned if we go below like 11,000 or we close below there. It would be nice to reclaim this 11,500 level very quickly, and we seem to be doing that. Another weekly close above there would be very positive. And then in terms of the targets for this particular leg of the trade, we've got the yearly pivot. Sorry, not the yearly pivot, the first point of resistance of the pivot points, and also the previous monthly resistance and the 2019 wick, and also the support and resistance of the blow off top and the following bull trap that we had back in 2018. So I think that is still going to be a point of contention to get over there. I don't think it's just going to be plain sailing. So what I'd like to see is this, and then this. It might be a bit much to ask, but that's the sort of idea that I've got for this trade, is to really scale out up here, and certainly off leverage, and then any sign of weakness I'll probably dump spot as well, which might not be for everyone. We are at the early stages of a bull cycle, so you might not want to dump your spot. I would totally also understand not wanting to do that. But if we do lose the lows down here, the next trade's obviously going to be managed the same as I talked before, looking at open interest and stuff. So I can't tell you exactly where I'll be bidding. I'm not just going to blindly bid at the CME gap if there's evidence that we could go beyond that and lower. Depends what's going on with the strength of the dollar, and all the other things, the metals and things like that. But overall, if we do break down, then fine. So what? We'll get another trade. We've made a bit of money in trading this range up here. If we'll have to cut the losses, no hardship. We know that we'll get another opportunity down here for another nice juicy trade. And in many ways, if this thing came back down, I'd be more inclined personally to load up. I'd be happier with more leverage at a lower price. So I'm, what are the chances? So if you went 2x down here, don't quote me on any of this stuff, but if you went 2x down here, you'd be liquidated somewhere down there. I mean, it's not not likely, is it? Unless there's some much other bigger thing going on. So whereas if I go 2x up here at 11,000, well, even still, you could argue that 6k would be where you'd get taken out. But the risk is that you start, really wetting your pants when you get down to like 9,000. So that's my style of trading. I like to leverage up when we're in a healthy period of consolidation. We're currently in a reaccumulation period, I believe, still. And so my micro strategy, well, not my micro strategy, but my overall short-term strategy is I'm scalping from 11,500. I think it's going to be a little bit of a challenge to get back over there. I'm interested in longing 11,333 again. Assuming we put in a higher low off this little bit of price action down here, and then I'll be taking leverage off. When we get back, hopefully up to. I mean, it's interesting. This little fractal thing would make a lot of sense with this horizontal line here as well. If we get back up to 11,900, I'll dump the leverage, and then I would believe that there'd be one more potential opportunity to really see, load the boat back up at 11,500, and that's when if we were seeing things like 4-hour OBV divergences and stuff, that's when I'm going to be full throttle, fully leveraged, trying to punch for those higher numbers. And that's the way I like to do it. Play the range. If our overall idea is to be long from the bottom of the range at spot, add the leverage, because I might be wrong and it might just keep going. It could be what Bitcoin's like. Sometimes you don't want to be, I personally don't want to be coming out of too heavy out spot up at resistance when you're trying to form a range. But when you ultimately you've seen enough information to make you think, okay, it's another higher low and I think we're going to break out, then I do keep the leverage on at the end of the move, and I let it ride, because it's, again, less risky. I'm playing around with money that I've made on taking the leverage trades. So at that point, I'm just like, well, what will be, will be, So yeah, that's just a general overview on Bitcoin. We talked, briefly on the other days about Ethereum. Ethereum is my barometer for the alts. I know Phil's looking at some of the DeFi stuff, and frankly, I don't have time to look at all of that stuff. So thanks to Phil for keeping that leg of stuff still going. But over $400 on Ethereum. Let's get back across there, and then I really think these alts will all turn around. They all look really quite toppy at the moment, particularly relative to Bitcoin, but they've had a much bigger, run up lately. So it's not unusual that if Bitcoin's consolidating, that these start to look a bit droopy. But yeah, still looks like we're still pumping on the 1 hour, pretty good. So yeah, that's it overall. My performance in the trading competition. I was just looking at this Salsa guy. He's on Twitter. He's obviously doing quite well. Started at 0.2 and he's up at like nearly 9 Bitcoins, which is an astonishing effort, really. There must be some serious risk going on there. This guy started at 0.3 and he's now up at 11. So he's made like 11 Bitcoins off 0.3. So I mean, you can't do that all. Well, maybe you can, but I find it hard to believe you could consistently do that all the time. I started at 0.1, but so I'm really at like over, what's that, like 300-400% profit or whatever. But I'm only getting credited with 200 at the minute, unfortunately. So it'd be cool if I could try and get this to 1 BTC would probably be a reasonable target. I struggle to hold on, like, just a critique of myself in this trading competition thing. I struggle to hold on to the leverage from the bottom. So I was getting like 70,000 contracts long or something, which is like 20x or 30x or something like that. But I like to take the profit early to just get the money in the bank, and that probably is the right thing to do. But obviously, you make the big juicy gains if you hold on to it for longer. So maybe I lack a bit of conviction in my approach, but it seems to be working out all right in the meantime. So I don't really have anything more to add. Do you, Phil?
No, it's
Any
all
questions?
good. It's all good. No, I was just looking at your performance in the competition. It's pretty good, mate. You shouldn't be too bad on yourself. You're making pretty solid profits there. I mean, God knows what Salsa's doing, but that's just something weird going on there. But I mean, it's pretty not bad performance.
Yeah, it has actually made me sort of realize a little bit. It's made me reconsider how I trade a little bit.
Right.
Perhaps what I should do, because what I tend to have is like my main accounts, which are like, take these long view, get into spot, and then relatively low leverage, but it's quite a big, the account's quite big.
Yeah.
But what I'm not doing is sort of putting a really small amount in and then really go and hammer at it, where you can sort of make, the degenerate thing, because it does keep your eye in the market as to what's going on another level. If you're just looking at the 4-hour charts, I think you can miss a trick potentially on the shorter time frames.
Right.
So I'm I know a lot of people are interested in the scalping stuff a bit more. So, we might get a developer to stick a bot in which tracks like an account. I might just stick one Bitcoin in an account and try and make it into, I don't know, something more, 10, 20 or something over a relatively short space of time. So that might be interesting to do as a bit of a challenge as well, and see how we get on. But overall, I think I'm just waffling on, really, to be honest. Is there any questions, or are people happy enough with what we've been saying?
We do have a few sites. Guys could have a look. Any chance you guys could have a look at QTUM USDT? Major things happening this Friday. We'll probably do that in the unless you want to look at that now, Phil. We'll probably look at that in the chart requests. I smashed through a few of those today. Apologies because I've been catching up post being away last week, but I smashed through a few of those. I think most, but let us know if you do want other charts looking at.
Yeah, I think with the chart requests, sometimes it can be a bit more time consuming to just sort of sit down and go through it, and then post the chart and write about it. I actually quite like just doing them live. So what I might just do tomorrow is just hop on for an hour or so and just blast through a bit of the backlog in there and any other ones, and I will record that session as well if we do that. So and then Friday, I haven't really decided what I'm going to be doing then quite yet. I mean, as I say, I want to try and work on this how to trade the way I trade, or to use the tools that I use specifically. But people seem to like to just have the sort of chill out and trade approach. So maybe we'll just do a bit of that.
Very good
stuff. All right then. So if that's it, so thanks for sharing your top sniper chart indicator, Phil. Impressive stuff.
Good stuff. No worries. Good. No worries. And if anyone's got any questions on it, just hit me up in the chats, one of the chats, and we'll talk about it. All right. Good stuff.
Thanks.
Cheers.